Tesla's 2025 Q1 delivery numbers just came out, and they're not great. So what we're going to do in this video is we're going to go over all the relevant data that you need to know about. We're going to compare that data to previous years and quarters. We're also going to talk about why this is happening. We're going to give you my thoughts, and we're going to talk about what you probably need to look out for in the future. So without further ado, as always, my name is Derek, and I got my degree in finance, so you don't have to. Let's dive right in. So first, the big one. Q1 2025 delivery numbers. Tesla delivered roughly 336,000 vehicles in Q1 of 2025. Now, simply put, this data is not great. Not only is it far below the original analyst expectations for this quarter, which was well above 400,000 units, but it's also below revised analyst expectations. Analysts revise their expectations to anywhere from the 360,000 to the 380,000 unit range for deliveries. This came in about 30 to 50,000 units below even revised estimates. Which also begs the question, Tesla stock at the time of filming this video, on the day that this data was released, is actually up. Why? Well, that's because the stock market is quite interesting. It tends to build in future results when it comes to stock price, which means the last couple of months of massive decline in Tesla's stock price also most likely sort of had these results built in. So then what happens today? Well, you would think that if Tesla beat analyst expectations, even if the results are negative, then the stock would move higher. But the fact is that Tesla actually underperformed even revised estimates. So it is interesting to see the stock price move higher. And that's why the saying exists. The market can remain irrational, or at least crazy, much longer than I or you can remain solvent. And this is something that we have to remember in our investing journey. But anyways, back to the actual data points. Now, this is a significant drop from Q1 of 2024, where 386,000 vehicles were delivered. Now, Q1 does tend to be Tesla's weaker quarter, but the fact that it declined not just from last year, but also from 2023, where in Q1 of that year, it delivered 422,000 vehicles, means that this drop is not just the standard pullback that Tesla experiences usually in Q1. Not only that, but this 2-year consecutive Q1 declines is the first time in Tesla's history. And this drop in deliveries is also much more pronounced when compared to Q4 of 2024, where 495,000 vehicles were delivered. This is a record for Tesla. But of course, we have to be aware that Q1 does tend to be its weaker quarter. It's interesting to see, though, and this will be important later in the discussion, how a very weak quarter can be experienced right after the strongest quarter in the company's history. Now, all in all, 2025 Q1 results equal a 13% decline from 2024 Q1 and a 20% decline from 2023 Q1. Now, before we go into the possible reasons as to why, because there are both very serious implications as well as some just standard business operations that have caused this issue. Before we go into that, let's touch on the actual model breakdown of these deliveries. So the primary driver was, of course, Model Y and Model 3, with over 328,000 of those being delivered. The remaining being Model S, Model X, and the new Cybertruck. And when it comes to the Cybertruck, the results here have been lackluster, although I feel like I see them everywhere. And although I think Tesla vehicles in general are actually pretty attractive vehicles, I really don't like the Cybertruck. So it's interesting to see these actual numbers when it seems like I do see them everywhere, at least in Southern California. But the numbers show that the Cybertruck, which was launched late 2023, really hasn't added too much when it comes to volume in Tesla deliveries. That of course makes sense because it's one of the more expensive vehicles and it goes well into the $100,000 range when you're talking about the dual or triple motor versions like the Cyber Beast. But all in all, there's your 2025 Q1 data. not really that great. Now, another thing that I do want to touch on is some regional data. Now, Tesla doesn't report regional data directly, but you can kind of estimate this when it comes to vehicle registrations, etc. And not just the United States, but Europe also saw major declines. Tesla registrations across the EU in January, year over year, were down a whopping 43%. And in some areas like Germany, they were down over 70%. This goes to show that the demand for Tesla, not just in the United States, but abroad, is weakening. We can also see that in China, although China is more so of a mixed bag. Tesla's performance in China for Q1 is lagging the previous year. When we're talking about year over year, just last month in March, China's Tesla registrations were down about 11%. And all of this, of course, has prompted Tesla to try to reinvigorate sales. 0% interest loans, price cuts, and other various methods have been used to some success. And there is some reporting that Tesla actually had one of its best weeks in its history in China during Q1 of 2025. So China was mostly a mixed bag. Okay, so now you have most of the main key points data-wise. Now the question becomes, why is this happening? Well, there are both serious reasons that implicate further headwinds for Tesla, as well as just some standard operational reasons. Now, when it comes to the latter, this is primarily because Tesla is shifting production from Model Y to Model Y refresh, and this both has implications on the demand and on the supply side. There is evidence that Tesla has a surplus of vehicles right now, which is unusual for Tesla. As they end the quarter, they tend to like to match production and sales. But in this instance, this makes sense. Tesla would probably want to ramp up production to have extra Model Ys while it has to shut down, shutter, or temporarily halt production in some of its facilities to then switch production to the new Model Y refresh. So some of this data is coming from that. And because of that, it'll be important to see the next quarter's results and the quarter after that to see how this new Model Y refresh actually affects demand. Of course, when there's a new model coming out, consumers might hold off purchases to get that refreshed model, which can also impact its deliveries. And that absolutely happened this quarter. But there are also some other very serious reasons as to why deliveries were lower this quarter. And that has to do with Tesla's leader, Elon Musk. It is well known that when it comes to electric vehicles and of course Tesla, a lot of the consumer base leans left. And recently, Elon Musk decided to align himself with Donald Trump, the exact opposite of probably the majority of his previous and future consumer base. And regardless of your political beliefs or my political beliefs, the fact of the matter is when you align yourself with the opposite political entity or party as the majority of your consumer base, it would be ridiculous or preposterous not to expect a massive decline in deliveries and sales. Now, did Elon Musk expect this much? That, of course, none of us will know because we can't read minds, but I'm sure it is serious both to Elon Musk and to the board and to major shareholders. So we'll have to see how they treat Elon Musk. The board has historically been very favorable of Musk, but I think if the next couple quarters of delivery data as well as just financial data for the company aren't great, we might actually start to see a shift in their friendliness to the CEO. And that, of course, brings me to my thoughts on all of this. Is Tesla doomed? Well, not really. Tesla is a massive company. It is flush with cash, over $30 billion plus on hand, and it can weather a storm. Not only that, but its deliveries in the past have been very volatile, as well as the stock price. So is it in any major immediate danger? No, it's not. But the fact of the matter is what we are experiencing here when it comes to deliveries foreshadows what we might experience in the coming quarters. And that is really the key point here. We're going to have to see how quarter 2 and quarter 3 and perhaps even quarter 4 goes. If we see a continued weakening in deliveries or in just financial data in general, we might then be able to have a clearer picture for Tesla in 2026 and 2027. But until that data comes out, the current data is really only foreshadowing. But another key point, in my opinion, that I think will play a major role in Tesla's future is other electric vehicle manufacturers. There are many other good quality choices nowadays, and Tesla and its vehicles tend to be, in a sense, stuck in the last decade. Not its technology. The technology is still, to a degree, cutting edge, but the vehicles themselves are showing their age, and it's probably time for Tesla to consider revamping the entire lineup at some point this decade. The fact of the matter, though, is that there are now a lot of other choices. And if Tesla continues moving forward with opening up the supercharger network to everyone, well, then it would kind of be like Apple opening up iMessages to everyone. Apple doesn't do that because it's a walled off garden, and it kind of uses these things to keep people in the ecosystem. Tesla has chosen to open up its supercharger network, which of course, in a sense, devalues the vehicles that they produce, because now I could buy a Hyundai Kia, I could buy a Mercedes, an Audi, a Ford, and if I have access to the supercharger network, then I'm not just going to compare vehicles to vehicles and network charging, I'm just going to compare vehicles to vehicles, because that key major advantage doesn't exist anymore. Now, I'm sure Tesla did this for financial reasons. I do think that they're going to make a ton of money by charging fees for allowing other manufacturers to charge at their superchargers, but we'll have to see if this will be enough to counter the very likely losses in sales as people start looking at other competitors because they can charge at superchargers anyway. I hope this video was informative as to what was released today. Now, Q1 financial results for Tesla come out on April 22nd. That's also going to be a very important date. And then, of course, we're going to have to see Q2 and Q3 results, and probably even Q4 results, to get a true picture of the future trajectory to the company. With that said, I do think that Tesla is in a little bit of a tough spot here, and we'll see how it handles it. If you like personal finance, world economics, and investing broken down simply, you are in the right place, so I hope you stick around for the next video. Until then, I hope you have a fantastic rest of your day and a fantastic rest of your week, and I will see you in the next one.